you probably don't have $25,000 lying around. And so you're trying to figure out how to trade without the PDT rule getting in your way and all this other garbage. This was me trading when I only had, what is it, like $13,000 in my account? And this is the exact strategy I was trading. And I still trade the same strategy till this day. So I'm going to explain what the strategy is and why it's the best strategy to trade with when you have less than 25,000. But let's talk about the problem right now. The problem with having less than $25,000 in your account is this. The PDT rule. It should be renamed the PTSD rule. Because whenever I hear this, I'm like, fuck. So the problem with this rule is that you can't trade 5 days a week. You're just straight up not allowed. If we look at this little diagram that I made over here, this tells the story. So if you have less than $25,000, maybe you take a trade on Monday, then you take another trade on Tuesday, another on Wednesday, but then Thursday, you can't trade. Because if you do place a trade, your account will be restricted. They restrict you from trading more than 3 times in a week. This is obviously horrible because we want to be trading every single day to try and squeeze out as much profit as we can. Imagine if Monday and Tuesday and Wednesday are slow, but then Thursday ends up being a crazy day. It's too bad you can't trade because Monday, Tuesday, Wednesday you already traded. So that's the main issue with $25,000. And a lot of people, what they do is they stick to the strategy. They trade options, they trade NASDAQ futures, they trade all this stuff, and they can only trade 3 times a week. Another problem with having less than 25K is that you need big moves. Like if you can only make 1% or 2% here, 1% of like 10K is $100. That's not really gonna do much. So you need big moves to happen so that you can put your money in there and make 10% a day, even 20% a day, 15% a day. That's what's gonna grow your account. Growing 1, 2, 3, 4% a day is not gonna do anything. You need big moves when you have a small account. But there is a solution to the problem. And that's the exact solution that I followed. Like I said, I only had like 13K in my account when I finally figured it out. So I'm gonna teach you what that strategy is. But before we continue, I have my free trading course. This includes a section on scanner, when to buy the stock, when to exit the stock. There's so much more in the course. Again, it's completely free. You have nothing to lose. If you're a beginner with less than 25K, this is the best strategy to trade. So click the first link in the description to go check out the free course. Now let's get to the best strategy for less than 25K. And here's the thing, you don't need a prop firm. Maybe you're tempted to start a prop firm challenge. You're like, okay, if I pay, $200, then I'll get access to 100K if I pass the prop firm challenge. Like, let's be real for a second. That's not gonna happen. And that's not because you're a bad trader. It's just because the system is designed to purposefully fail you. Prop firm is a business model. They want you to keep failing so that you keep buying up challenges. That's the whole business model. They don't want you to succeed. And even if you do succeed, they'll take 50% of your profits. So if you trade with 100K and in 1 month you grind your ass off and you make $10,000, before you withdraw the money, they'll keep 50% of it. What type of bullshit is this? This is terrible. In no world does this make any sense. So you don't need a prop firm. Stop believing you need to pass a challenge and all this garbage. You don't need a prop firm. They're literally built for you to fail. They want you to fail because they make more money. So how do we get prop firm level profits without the bullshit? The answer is small caps. And I've literally put a gold emoji next to it because that's how important this is. This is like the best thing you could possibly ever discover. Because with small caps, you get prop firm level profits without having to give 50% of your profits away, without having to fail a challenge, without paying $200 a week to pass a prop firm challenge. You get the same moves without any of the drawdowns. And another major benefit of small caps is T+1 settlement. This is gold. This is gold. Now, what does this mean? This means you can trade 5 times a week. Remember right now you can only trade 3 times a week. You're like, fuck, I missed a move on Friday because I already used up my trades. Fuck. With this, you can trade every single day because it only takes 1 day for your cash to settle. So if you have $10,000 in your account on Monday, You trade with that $10,000. You can trade with that same 10K on Tuesday, and then the same 10K on Wednesday, and then Thursday and Friday. You can trade with it every single day of the week. And this is an example of the moves that these small cap stocks actually make. So you see that the stock opened at $1.60. Again, you might be used to trading, S&P 500 options and futures and all this other shit. So you might be like, wait, why is this stock trading at $1.60? Because you're so used to seeing stocks trading at like thousands of dollars, etc. But this stock opened at $1.60, and it went to a high of like, what is this, $3.30. It more than doubled. Think of it more than doubled in like 30 minutes. Isn't that crazy? When was the last time you saw your S&P 500 futures doubling? When was the last time your Nvidia options doubled? Never. So you get the returns that you would get with options without losing all of your money. And you get the returns that you would get with a prop firm without having to donate 50% back to the prop firm every time you want to withdraw. And without having to pass these stupid challenges. Like how many challenges have you passed, man? I mean, come on. Like they're literally designed for you to fail. So this is I genuinely believe small caps is the way forward. If you have less than 25K, this is the only thing that you should focus on. Forget about leverage and losing half of your money. You should focus solely on small caps. Give you all the upside with no downside. There's literally no downside to this. Now let's go to the strategy in detail. Step number 1 is we need to find the stocks. How do we find these stocks that are doubling every single day? How do we do it? We use something called a scanner. What this does is it takes all the 10,000 stocks in the market and it sorts them by whatever you want to sort them by. If you want to sort them by the highest volume, you can sort them by highest volume. If you want to sort them by the one that's performed the best over the past 2 weeks, you can sort it by that. It allows you to sort the scanner by whatever you want. What we want to sort them by is something called the gap percentage. This is going to be the major thing you have to keep in mind. We're only going to be trading stocks that are gapping up, and we call them gappers. Now, these stocks are gapping up for a very specific reason. They don't just randomly gap up. They gap up for a reason. So what you'll see is, pre-market, these stocks will be going sideways. Out of nowhere, boom, they go up. Then maybe there's a pullback, it go up again, right? And so by the time market opens, they're performing really well. They maybe already doubled. Like look at this one, CETX. This one went up 111%. So when market opens, this stock is already up double. Do you not want to be trading this? Of course you want to be trading this. The stock just doubled. Even if I get a tiny sliver of that move, if I only make 10%, that's pretty fucking good. Right? Look at this one, SILO. This one went up 66%. So this one went up 61%. So we want to be trading the stocks that are super volatile. They're trending upwards, and we want to be entering those stocks. And another benefit of this gap scanner is that every single day the gap scanner changes. So every day there's a new catalyst that comes out. There's a new reason for these stocks to go up. So every day the gap scanner will be different. It'll be full of fresh new stocks that are gapping up for that specific day. And this is the benefit, right? If you're only trading Nvidia or Tesla or whatever, if Nvidia has like a very sideways momentum, like it just doesn't go anywhere, it just goes sideways, you're not going to make any fucking money. But with this, every day we're purposefully finding the stocks that are going up. So we're only trading the stocks that have momentum. If Nvidia doesn't have momentum, too bad, you have to trade it, you make no money. But over here, you're purposely trading the stocks that have already a lot of momentum. That's step 1 done. Now step number 2 is we wait for a chart pattern. I just trade one single chart pattern, right? I trade the gappers. Once I have all these gappers in mind, I just wait for one of them to make a chart pattern. And this is what the pattern looks like. It's called the bull flag. So you see that first we have like a nice move up, right? Then it dips. Look how perfectly it dips on the 9 EMA, and it starts making another leg up. Then when it starts making another leg up, that's where I'm getting interested. That's where I want to be entering for the next move up. And then you can see it makes another little dip over here. And then I'll go back up again. So all I'm doing is I'm just buying the dip. You know, when the stock is surging upwards, I just wait for it to dip a little bit, I buy, and then it goes up. Dip a little bit, I buy, and then it goes up. That's the entire point of the bull flag. We're not guessing which stock's gonna go up. We're not predicting this. We don't have Fibonacci indicators and so many Bollinger Bands, none of this stuff. It's just basic logic. If a stock's already going up, I wait for it to dip, I buy it, and then it continues going up. This is going to be the chart pattern we're going to be exclusively trading because it's the most simple. So let's take an example of this, right? This is another example of a bull flag, and this is a real trade that I took. So let's play this kind of minute by minute, and let's wait for the bull flag, and let's enter. Let's go. Next. Boom, it goes up. Remember I said that we need for it to be going up before we enter. If it's going sideways, it doesn't matter. I'm going to ignore it. So you can see from here, this kind of area, it was just kind of going sideways. It wasn't doing much. But now, you can see it surged upwards. And look at the volume on this as well. This is amazing. So this perfectly fits our criteria. It's surging upwards, heavy volume. This is perfect. Now I just need to wait for that little dip I was talking about. Once we see that dip, enter. Hopefully it shoots up. Let's see what happens. Boom. We see the dips. And another thing we see, which is super good, is that it's finding support on this line over here. This line is called pre-market high. It finds support on this line, and you can see volume is also dying down. This is also great. What this tells you is that people are not dumping their shares. They want to hold on to their shares because they believe it will continue going higher. This is perfect. Now I just need to wait for the last part over here, which is the next leg up. Let's see what happens. I want to be entering on the next candle. Boom. I enter. As soon as this candle opens and it breaks this, I enter over here. And it surges up and up and up. See how simple that was? Now, step number 3 is obviously to take profit. I've already entered this position, but when do I sell? What do I need to see to finally sell my shares? And this right over here is what you want to see. This is going to be the key word. We need to see resistance. So many beginners make the mistake of either selling way too early or selling way too late. You want to master this. You want to be the master of selling. Like, I genuinely believe one of the reasons I'm so successful at this is because I know when to sell. I can hold my winners for as long as possible. I don't make the mistake of selling too early. I don't make the mistake of selling too late. I mean, obviously sometimes I do, but most of the time I don't. And it's because I specifically sell once I see resistance. I don't sell whenever I feel like it. I don't sell after a 2-minute timer is over. I sell after I see resistance. Now, where can we see resistance? What specifically do we need to see that constitutes resistance? The first thing we have over here is something called a topping tail. So what this is let's imagine the candle opens right at this level. It surges up to this level, but it crashes back down and it closes red. Maybe it has a little bit of a bottoming wick. This is terrible. This is absolutely horrible. What this tells you is that whenever the stock tried going above this level, it instantly got sold back off. So there's a wall of sellers around about this level that are just waiting for the stock to increase so they can just sell. So this tells me there's a lot of resistance. I don't want to be holding the stock once I see this. And look what happens over here. As soon as I see a massive topping tail on this red candle, I sell. Super simple. The other thing I look out for is high volume selling. Look at the high volume on the same red candle. This high volume it's higher than the previous 1, 2, 3, 4 candles. Maybe even 5. It's higher than the previous 5, 6, 7 candles. So what this tells me is that there's a lot of interest on this candle. And why is there a lot of interest? Because everyone's dumping their shares. So this is very clear to me now that this stock has a lot of resistance and I need to sell it. There's no point being in the stock anymore. I'm not going to get too greedy. I just need to sell. And that's why I sold. Again, remember, it's a very simple concept, but this will make you so much money in the long run. Now, from this one trade, I made $8,000. From just one trade, right? And it was a 6-minute trade. Now, obviously, I've been doing this stuff for a while, so I'm going to be very good at it. But that doesn't mean you can't get good at it either, right? Find small cap stocks. Wait for a good setup. Wait for the bull flag. Enter with conviction. Then when it goes up and you start seeing a bunch of resistance, like a topping tail or like high volume selling, that's when you want to sell. And that's literally the best, I don't care what anybody says, this is the best strategy to trade with. When you have less than $25,000 in your account. I guarantee it. Now, if you're hearing this and you're a bit confused, you're like, Draco, this is a great strategy. I want to learn more. Then I invite you guys to join the community, the Draco Room. In this community, I literally teach you guys how to trade small cap gappers. And look at all these wins that these people are making. I can just scroll forever. And they're all trading small cap stocks, and they're all trading the same bull flag pattern. In the community, there's also a live mover section. So whenever I see a stock that I like, that I think will make a bull flag, that I think will perform well, I always notify you guys every single day so that you guys know exactly what stocks I'm trading. So to join the community, email me at thedracoroom@gmail.com and I'll try to get you a spot inside. Every 10 members, we're going to be increasing the price, right? I don't want too many members inside. So if you do want to get in, email me at that email and I'll get you a spot inside. So I hope this video helped. If you have less than $25,000, I believe this is the best strategy to trade. Forget about options, forget about prop firms. Stop wasting money on prop firms. I swear to God, it's useless. Focus on small cap gappers, focus on the bull flag, trade the bull flag, and I think you're going to be very successful. Thank you for watching.